Understand the noise in the market, which what happened with Bitcoin. People dumping all this money. The people who make the real money are not the people who run in a herd. They already been had money. The people who are like people that are sweating right now are the ones who just got into the market within the last 3, 4, 5 years. Somebody that was in the market 20 years, they ain't true. They okay. I'm down a little bit, okay. Because they not a herd thinking, they go ahead of the herd. So I teach my students how to identify stocks that are likely to take off based on the analysis of support and resistance. So what happens is the market tells you exactly what it's going to do based on what it did before. Think about all the hundreds of thousands and millions of people that are looking at the same exact chart with the same information. So you can pretty much predict what most people are thinking when they see this big jump down. When this falls right here, what most of them, oh my God, it's about to go back up. What does it do? It goes back up. The reason why this was a sharp drop is because when they saw this little drop right here, they got scared. And a whole bunch of people sold at the same time. I could see this on the chart. Now, it's more exaggerated when you look at a 5-minute chart or a 4-hour chart, because those where all the noise. But me, I look at a day and a week chart. So really what I'm getting at is, you don't have to be sitting and looking at a chart every day to be an investor. You can set that thing up once a year. Look at it once or twice and don't even bother with it. Because you're looking at a bigger picture. You're not just there to speculate. So understanding support and resistance, and these are zones within zones, you can make an informed decision where to buy, where to sell, or whether not to do anything at all. Now, an example here, we're looking at Facebook, price trend analysis, my example. Using that example, I made $35,000. That's in the video. I'm basically walking you through what the decisions that I made in that video. When the stock fell, this was my entrance here. Remember I showed you that on the thing? It went up here, but I'm like, same reactions on. But it fell back down, so I'm like, let me buy some more, because this is the same exact area that it was at before.
Right, that's right.
But I don't dump everything in, I scale into my position. So if I have 100,000, I don't dump the whole 100,000. We'll drop a little bit in at a time. And so when I saw this break up here, bullish, I'm like, oh, we're above this zone. It broke out above where it couldn't break for the last, 3 months. So now I see an entrance opportunity. This is what's called a gap. Anytime you see a gap, the gaps usually resolve themselves. They usually close themselves. But I see a bullish gap up. So what that means is it opened the next period, because so many people had power money in here, this didn't even show up. It just gapped up. It just showed up the next day. But it never actually fell back below. And so I added some more there. And it went up and my profit was that. Okay? I put this amount in, that was my profit. That's, you follow? Mm-hmm. All right. This is, again, these are old numbers here. Domino's Pizza, this is what I put in. It was my profit using that same example. All you guys got to do, if you want to look at the prices of these stocks now, pull up Domino's Pizza on your phone, see where it's like $246 today. Okay? So using that same analysis, okay, I did this again a couple of years ago. I was able to add to that position $17,000, 50% profit. Okay? Weight Watchers, Oprah Winfrey. It was $13.68 a share. My profit as of this date, I think it's a date on here, 3/28/17. 74. Somebody please tell me what Weight Watchers is trading at today. Okay. Risk management. So position risk. Okay. And then what was the other one? Yeah. So again, I'm not always right, but how many times do you really need to be right too? Position risk, portfolio risk. Okay? You want to diversify. That's also a way. So this is how you're managing your risk when you're doing this. This has to do with not putting so much into one position. So if you have $100,000, you don't put more than $10,000 in a position. It's tempting to do that because, oh my God, I can double my money. You can lose all your damn money too. So you have to, that get rich quick will make you broke quick too. Portfolio should not exceed more than 50%. That means if you have 100,000, I don't want any more than 50,000 tied up in all of your investments. Oh, you shouldn't have that whole 100,000 tied up. Because now look at where we at today. If all your money were tied up, then you'd be like, it's gonna come back. But how long?
Yeah, how long?
You feel what I'm saying? So again, this, what I'm teaching you here, I actually teach people this who manage money, like at a larger scale than I do. Okay? So when you're a mutual fund manager, they're doing this, what I'm telling you. But they're just not as good as me. And I don't want to do it. Because it's too much headache, it's too much regulation. And I don't want to work for nobody. So, but they're doing the same thing. Your mutual fund manager is not probably going to be able to make the kind of money I make, and I'm going to explain to you why in a second here. Gradually scale into profitable positions. Don't dump all your money in at one time. Now, I'm going to use Apple for example. $142.45, January 3rd was when I took this screenshot. So assuming you had an account size of $10,000, the max you would be able to spend based on that 10% threshold would be what? You only buy 7 shares. You follow me? Based on that 142.45.
What year was that?
This was January 3rd.
The other day, this year,
Okay? So based on that 10% threshold, you only want to purchase 7 shares. Now you probably sit there thinking, okay, how am I going to make any money with 7 shares though? Right? Because it's going to take so long. I mean, it takes a long time for a stock to double. That's for an established company. Okay? So how do we get back past? I'm going to show you that. So if the stock goes in this example to $200 by January of next year, your profit will be $400.
Understand.
Okay? You follow me?
Are you recommending me buy?
No, I'm not recommending anything. Don't put that on me. I didn't say that. I didn't say that. Okay. So the maximum investment that you can make would be what, 7 shares, right? So profit if stock goes to $200, which it probably will. It's been there. Apple has been $200, right? You would make $402.85. So the question, let me ask you this question. So how can you really invest when you don't have it takes a large chunk of money based on this and really to see if you're using stocks, right? How do you really make that work? There's something called stock options. Stock options allow you to take 100-time position in a stock, right? An option contract gives you control over 100 shares of stock. One contract does. So it amplifies your buying power 100 to 1. So a $10,000 account can control $1 million worth of stock. So now your brain shifted a little bit. How I created that kind of money from 100,000 in that period of time. It wasn't because the stock was going up. It was because I was using stock options. I wasn't buying the stock. I was buying the stock options. So using that same example, I'm not buying Apple shares. I'm actually buying Apple stock options. Account size is 100,000 or 10,000, excuse me. Remember, my maximum investment is limited to 10%. But remember, with options contracts, I can control a larger block of that stock without actually having a lot of money. So, using the stock options, I could actually achieve a profit of $2,505 with that same $1,000 investment. The same thousand, you follow me? I'm investing either in the stock, which I would make about $400, or I can invest in the stock option with a January 20 expiration date, and I could achieve a profit of $2,500 in that same year's time if Apple reaches $200. Stock, and let's go back a second. Yes, ma'am.
Can you just briefly explain what the option actually does? Like it's you know, how the leverage works?
So basically, it is a contract. It is a electronic. It's a contract. It's like if you were to enter into a real estate transaction, when you do option money or earnest money, you're basically controlling that property. You're pulling it off the market, right? With that money. That's what does that. It's controlling without owning, but you still have the benefit of ownership without the control or without the ownership. You follow me? So correct, because it's a separate instrument. Don't just keep it separate. The option correlates to the stock. So when the stock goes up, the option will go up. You're just basically, it's a separate instrument, but it moves in conjunction too. You follow me? However, here's another thing you need to think about with options. You can make money if the stock goes down too.
Yeah, wow.
Apple could go to, there are people who made billions of dollars when the market went down. There's somebody getting rich right now off of put options. It gives you the right to sell, even though you don't actually own. So, with that being said, you can make money if it goes up, if it goes down. So you see how this is different from the insurance piece now. Now we're moving into, we got the house foundation. Now we can look at some advanced strategies to allow us to profit. No, it doesn't matter if it could go to zero. You'd probably make $1 zillion if it did. Now, I don't typically do put options because here's my philosophy. Stocks are not meant to go down. They're not. They don't do public offerings for the stock to go down. The primary market offering for a stock is to raise money for that company. That's the purpose of a IPO, initial public offering. It's they're selling chunks of ownership, common equity, preferred, whatever, in that company to raise money for that company's operation, growth, or whatever. So stock is not meant to go down. So if I think a stock is going down, I don't fool with it. I could buy a put option, but that's a riskier proposition because you're basically betting on the stock doing something that it's not designed to do. It will, but it ain't gonna do it forever unless it's Snapchat. Now, if you were smart, because there's some of my students, they do put options and they make money. I just don't do it. So when you become an investor, you will learn your style of what you are comfortable with. Some stuff I just don't do, you might do. If you're my student, you may, well, I want to do it because I kind of, okay, well, do what you do. I'm not personally as an investor comfortable because, again, stocks are not meant to go down. They're meant to raise money. So again, using that example, so here's my friend's account, Tanya T. Davis. She put $5,000 in this account. She wanted me to manage it for her. As of that date, her P&L was $6,932.81. So I had basically, this is settled values. I basically tripled her account. Again, using call options only. I didn't do any puts, okay? Just not my style. So when you set up your account, you gotta keep in mind the amount of risk on each trade, how many trades you take at any given time. What happens is when I teach my students how to do this, they get so excited. Oh my God, I want to do this. Hold up. Hold up. Focus on one thing at a time. Because you can get overwhelmed with excitement and you're like, oh my God, I can do this with Apple, I can do this with this and this and this. And you'll have too much going on at one time. And when everything starts going the same direction, you're going to be like, oh. So limit your risk up front. don't get too excited. How much you gonna set aside? This should be money that you can afford to lose. Not saying you will lose it, because if you do it like I teach you, you won't. But you should not be laying up at night worried about what Apple gonna do tomorrow. If you worry about what Apple or Facebook or Netflix or Chipotle Mexican Grill is gonna do tomorrow, you got too much damn money at risk.
Right.
You should be able to let that money ride and not be worried about it. So we don't play with house money, or we don't play with, you know, foundation money. That's the insurance, that's the reserves, we don't play with that money. This is money that where you can put out, invest, manage, grow over time. Again, time frames are important. Okay? So that's that. Y'all are like, oh.
I got one question.
Yes, sir.
When it went down and you said you wouldn't do a put on an option, would you buy since it went down? Like a stock?
So we go back to and understand support and resistance, right? If it hit that support level,
Yeah.
once I set my charts up properly, I would be able to determine that if it hit a level that where the stock reacted previously. So
Okay.
if the stock hit this level, first of all, you got to know what time frame you're looking at.
Yeah.
Because think about this. Let's look at this for example. Each of these blocks is a month. You see that? So each of these candlesticks has a lot of data in it. This is not just one day. So when you see the market going and doing all this stuff, you're looking at something that's like a small, you're looking at the smallest time frame. But the big picture may be looking like this. So if you don't set your charts up properly and understand time frame analysis, you could be selling when you should be buying. Or you could be buying something that's in a downtrend. This could be looking like this. But because you don't know how to set your charts up, you go, oh my God, it's going down. But if you zoom out and look at a yearly chart, it looks like this. So what you need to do is identify, okay, it's up, but I need to identify when I'm going to get in. I know I want to get in. When am I going to get in? And that is why analyzing support and resistance is so critically important.
Is
So-
that all you use, is support resistance?
Are you trade? You don't use nothing?
I don't use any indicators. I look at the chart and I let it tell me. Because indicators are a mathematical representation of price. It's a formula that somebody has put together and they run the numbers through it and it draws something on the chart. I want to look at what the chart is telling me, not what something on the chart is telling me. So once you learn how to do this, you can look at that chart, draw that support resistance zone, and you can make your determination as to when you're going to enter that position. It works in all, if it's currencies, works the same way. In fact, it's more simple because you don't have all the moving parts. Like you don't have, you do actually have currency options, but that's more on the institutional side. But just trading a Forex account, you can do the same exact thing. I mean, I've been in a Forex trade with Euro and stuff, and I've turned 5 into 10 in a month. But it go back the other way too, and it has. I've lost money now. Don't get me wrong, I have lost. I have not always made money, but the thing is, I never lost everything because I learned as I went forward to minimize my risk.
You've never blown an account before, ever?
No.
Really?
Mm-hmm.
That's awesome.
Because I started when I was 19, before I had money to blow. And I learned when I was 19, starting with currencies, don't put too much risk out there. So now, I'm gonna tell you what started when I was young in college. I had about 27,000, 20-something. And this is when I first started learning. And I had invested into this managed account program. So I was kind of young, wet behind the ears and stuff. I was realist. I'm about making all this money and stuff, you know. So I invested into this program. Now people say, well, how the hell did you? Look, when I was 15 years old, I was reading books on real estate investing. I knew how to buy properties at 15 years old. I just didn't have the money. So I started very early accumulating the knowledge. So by the time I was 19, it was like, oh, okay. This is what I'm gonna do. I'm gonna invest in this account, and I'm gonna make this interest there. But I was thinking like that at 19. So, no, I never blew an account before. Have I lost a lot of money? Yeah, I've lost half of an account. And the reason why is because I was going off what somebody was telling me instead of going out and learning it myself. So I invested into this account, and it went from, I lost like half. It was like I was down to $12,000. But from that point, I realized, oh, I gotta learn this shit right here, because that's scary. Because you don't know who to believe. When people scam you out your money, you get to the point you don't know who to believe.
Yeah.
So I was just like, well, I don't really even want to listen to nobody. I just need to learn it myself, because I don't even. I ain't got no money to be giving them, because for me, my money was accumulating in school from refunds and stuff. So I mean, I was working and I was still getting like $5,000 and $6,000 like school refunds in school on top of me working. So I had some money to do some stuff with. So me, I'm like, well, let me just do this, and then it took me down, and then I started, stuff comes up with school, then you get, all that kind of stuff. So the main thing is, I have all those blown in the account, but I didn't. Any other questions? Yeah, I gotta have some questions. I'm just playing. Okay. Yes, ma'am.
When you talked about the options,
Yes.
okay, 'cause like I have a Vanguard account and I went in and I chose to buy something the other day. I didn't see the choice for options. All I saw was the stock itself, and you can, there are about 3 or 4 choices it offered, but what you described here didn't seem to be one of them.
You have to set up the options. There's an options account. Your account has to be enabled to do that. When you go through and open up your account with the brokerage, they're gonna have you fill out an application. It's just like opening up a bank account, right? When you open up a stock account, they actually take, it's like opening up a bank. It is, really. You opening up an account. So they take you through the whole anti-money laundering, they run your background, all that kind of stuff. The same way, if you've opened up a bank account before, you know how it's just like that or more. So when they open up a stock account, same thing. And part of the due diligence phase that they do when they're opening up these accounts is they assess your investment knowledge. They ask you some questions. Well, how much investment experience do you have? What are you looking to do? And so based on that information, they'll say, okay, with this person, they just open up a standard account. So there are different levels that your account can be based on the level of sophistication that you exhibit in the application process. Now, there are options brokers. Like I use eOption for my client's account, and it's strictly for options. I could do stock, but they specialize in options, and the reason I like to use them is because they're inexpensive. You do have to pay commissions and fees when you buy these stocks, $5 on each side, $5, $6 on each side.
What's the startup fee?
So they say the minimum account opening for some, they say, oh, it's $500. You can't do shit with $500. The fees alone are $5, $6 on each side.
Right.
So by the time you buy one stock, that's $10. Just the fees. E-Trade, it's expensive. So these small accounts and stuff, you just can't do it. You gotta have a larger account, or you need to do options. But you can, but if you only have $500, you don't have enough, because you don't have any wiggle room. You don't even have the array of options. You can't buy anything. The best you can do is invest in education, so that when you maybe get your tax refund money, once you set up that P bucket, like we talked about, and you want to put some money aside and you want to kind of do some things, then you could do that. But $500, they tell y'all this, no money down real estate investor. Oh, you can only start with $5. Just because that's the minimum does not mean that's what you should do. They say, oh no, the mortgage, you qualifies for this. That don't mean you need to get that. That's not what that means. You still need to make that decision based on your situation and what you realize your risk tolerance is. Yes, sir.
Quick question. What's your take on penny stocks?
Bullshit. Now, excuse my language.
It's not like the Wolf
I
on
can't
Wall
stand
Street.
The reason why I don't like penny stocks is because penny stocks are they're very frequently manipulated. Most of the time they're traded on exchanges called OTC pink sheet exchanges. These are exchanges that are like the Wild Wild West. There's very little to no regulation. There are some companies on these exchanges that are run out of people's basements. They have no physical address. They have no revenue, no expenses. They're dummy companies that actually use these exchanges as ways to try to raise up money for the big people, and then they sell them real quick. They hire people to pump the stocks. It's called pump and dump. Hey, buy this stock, buy this washing machine company in the middle of Iowa. Okay. So a whole bunch of people who ain't got no money think they're gonna get rich, and some people do. The people who knew the information before you did, they got rich. But by the time you act on the information, it's too late.
Day traders.
You see?
Yeah.
See, the people that do this stuff all the time, they get that information before you do. So you can't even, you can't click by fast enough.
Yeah.
You can't. So if you're not in that space, you don't need to be playing in that space. Deal with something that's solid. You know what I'm saying? If you're gonna gamble, like I said, if you're gonna gamble, go to the casino. Why not? Go to the casino. Yes.
I have a couple questions.
Yes.
Number one, do you trade Forex and which brokers do you use, or which platform do you use?
I use forex.com, FXCM.
Okay. What about the broker? Do you have a specific broker you use?
For
Like Traders Way or, you know?
I'm gonna be honest with you. When I use eOption, that's what I because it's inexpensive. You know, but the main thing is that for me, I used to manage money for people, like you saw me do. When people start seeing me making money, okay, I got $5,000. Can you do that? I'm like, okay, sure. It got to be too much of a headache because people call you, oh, what's going on? It's easier to manage your own money than it is somebody else's. Because I can go down 50% and I'm okay because I know what I'm doing, but you don't know what I know. So you may be tripping, and I might be like, what the fuck is she calling me for? I mean, seriously, like it gets to be annoying. So for me, I have had people that, like, I give you 30% of the profits, and I was charging people 30% of the profit because it's a lot of work.
Right.
But I started looking when the market started going down, and I gotta have 10 conversations. No, I can't. So I'm like, I'll teach you to do it on your own. But me managing people's money, no. Hell no. No.
Okay, and the other question is, isn't there a platform that you can almost like practice with the options?
So, good question. So I don't know what happened to some of my slides. I guess the devil took them. Okay, so with these platforms, you have demo accounts.
Right.
So what I always say, there's a step I always say to you, and this is what I take my students through in my training and the Stock Market Mastery course, is the very first module I teach. I said, look, practice, practice, practice. If you cannot successfully trade virtual money, you're not ready to risk real money. I need to see you take a $50,000 fake account and profitably make money consistently.